Proof that private funds aren't worth what management says they are. Now, people often invest in private funds in areas such as equity, real estate, and loans because they don't like market fluctuation. Now, this is ironic because I'd rather have the manager who's getting paid somewhere around 1.5% manage the assets, come up with a value those assets. That's just crazy. Talk about the fox guarding the henhouse. You see, the manager of the fund wants a value high to keep their fees high. We always explain to people the difference between risk and volatility. Remember, volatility is not just the up and down movement in the portfolio, which means it's not just the downside, but it's also the upside as well. Volatility should not be a problem for the knowledgeable advisor or investor. When looking at volatility versus the lack of liquidity in the private market, to me, I gotta say it's a no-brainer that weathering volatility is by far the better choice. People are now getting a little bit impatient with private investments and they want to get their money back. They are tired of waiting once a quarter to simply receive a small amount of their investment back. A couple of funds, like Blue Rock Private Real Estate Fund, well, they decided to go public, and they were surprised to learn that the net asset value that they were quoting of $24.36 a share was well above the market price that was established of $14.70. That's nearly a 40% drop. Another private fund called FS Specialty Lending that invests in loans, well, they had a similar story where they thought their net asset value was correct at $18.67, but when it went public on the market, well, it dropped about 25% to $14 a share. Looking forward, there is no doubt that other private funds will turn to the public markets to try and make their shoulders happy. This is happening mostly because as returns for private funds and investors take on as much of the assets as they can, the fund managers are left with reduced fees because of the small amount of assets, and they'll likely decide to end the fight and just list on the public markets. As always, our warning is, if you're not in private investments, stay away and do not be sold a bill of goods. Stay with public investments and understand that there will always be volatility when there is a public market for your investment. And that's not a bad thing if you understand it. I'm Brent Wilsey with Wilsey Asset Management. If you like these videos, be sure to get a like or comment, and feel free to check out our other YouTube videos and the weekly newsletter for the latest economic news, expert analysis, and market insights.